Good afternoon, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hope all of you had a very nice day of trading today. And in today's markets, guys, well, the bulls went on an absolute rampage, hitting new all-time highs in both the S&P and the QQQs. Most of the heavy lifting was once again done by the big tech bulls, which has been the case more often than not over the past 2 weeks, but the rest of the market does remain healthy. A lot of that performance came from a CPI report that came in roughly in line with expectations, but did show that inflation, although on a bumpy path back down to 2%, is indeed still in declining trend territory. So in today's video, we're going to take a look at a few things. Number one, of course, we have to take a look at the CPI report and see where are still the somewhat sticky elements of inflation. So that'll be in part one. Part two, we're going to explore one company earnings that had their earnings after the bell today, which is going to be Adobe. Tomorrow is going to be a big day as well. Broadcom, AVGO, and Costco coming in after the close. We will do those in tomorrow's video too. Thereafter, guys, we're going to take a look at our major sector analysis, take a look at the TA in terms of our major sectors, see how the market is shaping up, is the rotation still healthy? And thereafter, lastly, take a look at our big tech names and see, despite the big tech outperformance of the last 2 weeks, are there still some possible good deals to be had in a lot of big tech names out there? So that'll be pretty much it for today's video, guys. No portfolio update for today. Traditional to my fashion. Usually I do those on the Monday, the Tuesday to give the trades for the week, and then do a big recap on the Friday session. So a lot to cover in today's video, guys. Let us jump right into the action, shall we? The SPY up a very healthy 0.77%, and the QQQ's up a very healthy 1.8%. Take a look at the heat map. It looks roughly the same as it has in the last 2 weeks. A lot of outperformance in big tech, and that is kind of where it stops, right? The bottom half of the market, healthcare, once again struggling on the day today. Financials not having a bad day at all, though, but the bottom half of the market, right? Other than a few big consumer defensives names, Walmart and Costco, I'm looking at you, the bottom half of the market still a little bit struggling right here, and that largely has to do with yields, guys. Yields is really what's holding back the bottom half of the market, but all in all, a fairly decent day of broad market performance. Put this on the 1 week relative, guys, and you'll see the exact same thing. Red across the bottom half of the market, but we have some outperformance in big tech. Take a look at the past 1 month and you will see the exact same thing. Costco, Walmart, big tech, and the rest of everything lagging behind. Now, this is a big contrast versus the July, August, and September periods, arguably even early October, where you had a lot of big tech names that were very muted, but the broadening out of the market was occurring. And now we have the flip, which is why about a month ago at this point, I was saying that since big tech was lagging behind, big tech was going to be one of the easiest trades in the next few months. And I'm glad to see that that thesis is actually playing out right now. So before we get into more technical analysis here, guys, let us jump right into aspect number one, which is going to be the CPI numbers. So CPI coming in early this morning, and we did quite well, guys. It did come in roughly in line with all the expectations month over month. 0.3 was in line. The year over year 2.7 was also in line with the estimate, although a slight uptick from last month of 2.6, and the month over month for core and year over year as well, roughly in line with the estimates too. So why did the markets jump in a phenomenal fashion? Well, we were obviously nervous about hotter than expected inflation, and that would have raised concerns, especially leading into the Trump administration, because we know that in terms of tariffs that he might be able to do, that inflation could possibly be caused by that, by those tariffs, right? So we want to avoid a second wave of inflation. Now, Trump obviously is not in office yet, but you would not want to see a steady and hard ramp up in inflation before possibly tariffs hit the ground running, right? So all in all today, very decent day for the markets. It removes, once again, an uncertainty catalysts from the watch list. Take a look after the CPI was released. Well, the odds of a Federal Reserve rate cut went up to 98.6% for the 18th of December meeting. Yesterday, they were about the mid 80s to high 80s, and now it is all but confirmed that the Fed will be cutting interest rates on the 18th of December. Despite inflation not yet being at the 2.7 target, guys, they are confident in its downward trajectory over time. Let's take a look at a few of these CPI components. So number one, we have to take a look at the core and headline inflation. So we know that we've been having an uptick since September, but as per Jerome Powell's words, it is a bumpy road down to 2%, right? As long as we're not seeing major upticks in many categories, we should be okay and this should be coming down. A lot of this remaining inflation is due to just a few categories here and there, and I'm going to show you guys exactly where that is right now. So here is your 12-month percentage change across a number of different categories. Here is the headline number as a whole, 2.7, but you'll see when we do a sector by sector drill down, it's actually not that bad. Food at home is now well under the overall rate of inflation. Energy as well is now in deflationary territory, negative year over year. We take a look at apparel. Apparel is also very close to 1% year over year, which is really under the 2% target for the Fed, right? Shelter. Shelter continues to be one of the stickiest components. Shelter and rent. I agree, it's a very large component of the CPI, and that is where most of the stickiness still is to be had. Because when we go through all of these different goods categories, food away from home again is still slightly above your average headline number, but it is coming down. Everything, guys, is in a downtrend. Gasoline, of course, is now negative year over year. That's very good. New vehicles, take a look at the plunge in new vehicles, now also in deflationary territory. And as you can see, guys, most of the inflation is still in that quite sticky services component, but I will remind you, 60 to 70% of the services component is indeed housing. So housing remains sticky. Housing prices should be coming down over the next 6 to 9 months as we kind of balance between supply and demand. However, it still remains one of the stickiest components of inflation to date. Take a look at the drill down, guys. If you do not believe these numbers, Yahoo compiles a list of their own basket of goods, and it is called Where Inflation Is and Isn't. I bring up this chart pretty much every single time we go through the CPI because this is what everybody is affected by, right? More real things than just looking at broad categories. These are actual real, subcategories specifically. So auto insurance, we know auto insurance has been one of the biggest rises of the year thus far. Airfare and rent. What I want you guys to focus on is average earnings. Here is your salary earnings. This number right here, earnings at 4.0% growth year over year, needs to be higher than the overall rate of inflation. That means that we collectively are regaining purchasing power. Now, it'll be a very slow process before we feel like we're actually gaining momentum against the prices of new goods in the grocery store and otherwise, but it does show that the consumer is regaining pricing power more so than not. I always say this every single inflation report, right? Prices in 2020 and 2021, they went like this, right? And now they're more of a streamlined increase, which is exactly what we want. We do not want the exponential rise, guys, anymore. That is the country killer, so to speak. As we can have more tapered and more smooth inflation, this is the style of curve that we want. Inflation cannot come down in a drastic fashion, guys. That would be massive deflation, and you only get deflation one single way. When the economy absolutely crashes, and to stimulate demand, all companies are forced to drastically reduce their prices, right? I know home prices are high. I know prices of groceries are high, guys. But I mean, prices do go up over time. Many of you are old enough to remember, there may have been a time where you were only paying $1, $1.20, $1.50 for a gallon of gasoline. Those prices, unfortunately, guys, are probably never coming back. Houses at one point in time used to be, for a starter home, $150K, under $250K. Arguably, I mean, there's still some in some markets, but arguably, those prices are never coming back. A bag of chips used to be 50 cents. Those prices are never coming back, guys. What is the key component here is we want to see the inflation curve really start to soften and smoothen out over time back to the 2% target. So it's going to be very tough to go back in time and get these prices without a true crash. If you want these prices, guys, you are hoping and praying for an economic crash, and be careful what you wish for, because if that happens, a lot of people are going to lose their jobs, and that might include you watching this video. So the best we can do is have a very stable economy as we are right now, and the prices of inflation, or the inflation rate, gradually slowing over time and prices remaining somewhat stable or coming slightly down. You do not want to see a crash in prices, guys. That means that there is something severely wrong in the underlying economy. So coming back to this chart right now, auto insurance, airfare, rent, education, housing are above the rate of earnings. You want to see everything below the rate of increase of earnings. That lets you know that you are gaining purchasing power against the items below. I agree. Rent and housing are very, very large components, but you can see, guys, we have pretty much, I mean, they have come down a lot, and we have now caught up arguably with those rates of inflation. So we are no longer losing pricing power against the housing market. And that is a key component in most people's household budgets. Below that, you have a lot of different things too. Everything else below, essentially, look how many categories are now below our average hourly wages, right? Hotel rooms, restaurant meals, medical care, pet and pet care. These are very important components for a lot of people. Personal care as well. Oh, here's your headline overall inflation. And then several categories are either below or in a deflationary cycle right now. Very important categories, right? College tuition, household energy, alcohol, groceries, especially a big one. Look at groceries, 1.6% year over year. So yes, I understand the prices now at the grocery store are higher than they were 3 years ago. But as I explained a few minutes ago, guys, they're probably not coming back ever, right? This is why our parents in the 1980s, 1990s, they were paying, as I said, 50 cents for a bag of chips, right? Under $1 for a bag of cookies. Those prices, unfortunately, are never going back. But keep in mind as well, their wages were also, in relation to the pricing power, their wages as well were less, right? So it's a very complex topic, but hopefully that explains a little bit of everything, right? Recreation, clothing, prescription drugs, transportation, another big one, down 0.5%, especially for everybody that takes public transportation. And then you have the deflation, right? New vehicles, appliances, furniture, those are pretty big ones too, right? For big ticket purchases, toys, used vehicles. This one here, you can't see it, but it's electronics, another very big component for a lot of households, rental cars, and a very big one too, gasoline. So you can see the picture is not so dire. A lot of categories are under your average hourly earnings, and a lot of categories as well are under the overall rate of inflation. So inflation, I was very happy with this report, but as we can see, guys, it will be a somewhat bumpy path down to 2%. All we do not want to see is a classic explosion of inflation to the upside, but so far that really is not the expectation, and I'm not looking for that either. No signs that that's actually going to happen. So that is pretty much everything for the CPI report. Hopefully you guys enjoyed that. Now, let's get into something juicy, shall we? And let's tackle Adobe. So Adobe. A lot of people ask me, Will, Adobe is a very solid SaaS company. Why are you never buying Adobe? Well, I will show you guys. I will show you guys at the end of this video why I am not buying Adobe, despite the fact that you cannot see any real problems in the numbers right now. Now, take a look, guys. In terms of their earnings, they did very well on earnings. However, their stock is down 9% in the after hours. Why is the stock down 9% in the after hours, guys? Well, hopefully after today's video, you will understand why Wall Street has a little bit of a problem giving the company the margins that it deserves, or rather the multiples that it deserves, right? So beat on EPS, and they did beat on revenue as well, up about 1.19%. However, the guidance came in a little bit light. So I'll remind you the context of Adobe as a company. There is literally, on paper, nothing wrong with this company. They have very high net margins. They don't have a lot of debt either. Look at their debt profile. Almost no debt, a lot of free cash flow, a lot of cash and cash equivalents. They do a ton of buybacks on the stock. So balance sheet is definitely not a problem for Adobe. In terms of growth, growth is decent, constantly expanding EPS and constantly expanding their revenue curve as well. So why is this company, a company with such good fundamentals, unable to break through its all-time highs when so many other companies are, and they never really miss earnings at all either, guys? It is a very solid, high-quality company, but it seems as though after almost every single earnings cycle, the company goes down. What exactly does Wall Street want, and what are the concerns here? Well, I'll read you the article, and then I'll tell you what I think, all right? So let's have a look. Adobe reports strong earnings, but stock falls on disappointing outlook. A lot of the reason for the drop today is possibly due to the somewhat lackluster guidance, even though the numbers were good. Adobe said it expects first quarter revenue to be between 5.63 billion and 5.68 billion, which was below the FactSet consensus of 5.72. So slight miss on revenue guidance right there. Now for fiscal 2025, because Adobe just wrapped up their fiscal year 2024, here's the guidance for the entire year. 23.3 to 23.6 billion. The street was looking for 23.8. So not only do they fall short on their expectations for Q1 coming up, but they also fall short on their full year. That is enough to bring the stock down a little bit, but 9% seems to be a little bit much, right? But we've seen that how many times over the course of this earnings cycle, guys, where the companies report very good earnings, but still come down 5, 6, 7, 10% in the after hours because of a tiny miss on guidance. Let's continue, shall we? Digital media, the company's largest segment, generated revenue of $4.2 billion in the quarter, which was an increase of 12%. Very, very decent for the digital media segment. The engine of innovation at this company is moving at a velocity that we haven't seen. When we think about the ubiquity of the Adobe ecosystem, our demonstrated ability to catalyze some of the most meaningful trends that have shaped the digital economy, I can't think of a better time to be at Adobe. Keep that in mind, and then I'll show you what I think. Adobe stock has underperformed its peers this year. Investor concerns over competition, and the timeliness of when generative AI will have a meaningful positive impact on the top line have hit the stock. So not doing the best in terms of monetizing their generative AI tools. We are literally 1 year into the monetization journey, and it's making a meaningful impact on the company, said the CFO. If that monetization wasn't there, you'd notice it in the financials. Okay. When asked where the AI monetization impact can be seen, Dern pointed to monthly active user growth. Monthly active users grew 25% year over year, which is very good, to about 650 million people in the quarter. Very, very, very solid for Adobe. However, the shares have still dropped 7.8% this year compared with the 33% increase of the NASDAQ. And this is true. Adobe year to date, before the earnings decline, are down 7% when the entire rest of the tech sector is up. Adobe is somehow still down. While the market's initial fears about AI disruption have subsided, Adobe's continued lack of AI monetization makes it increasingly difficult to pick them as a clear AI winner. Aha! Now we come to the crux of the problem, and which is a problem that every time some of you ask me about Adobe stock and why I'm not buying, this is the concern that I'm raising, guys. This is a classic case of a company that had absolutely everything going for it. Absolutely everything. They have the money, right? They have a ton of money at Adobe. You guys saw the free cash flow numbers, right? They have an absolute metric ton of cash, which they generate every year, and cash on the balance sheet as well. Billions and billions and billions of dollars. They have a phenomenal team because they have built a lot of very phenomenal products, right? You guys know how deep the Adobe product suite goes in terms of the amount of products that they actually have, right? So let's take a look at the Adobe products right here, and I'll show you how many products they actually have. It is quite substantial, right? Over 65 different products as a whole. Look at them all. 65 different products, right? So they have the team, they have the tech, they have the budget. So why, and this is going to be crazy, I'll show you this one, and you're going to understand why Adobe has been struggling so far, at least in my opinion. You kind of have to read between the lines, and you have to deep dive this analysis as a whole, and this is why I do not invest in Adobe's business right now. They are falling behind in the one place that, as a market leader in the industry for photo editing, video editing, and everything else, the one place you cannot fall behind or do poorer than the competition, especially new startup competition that does not have the team, does not have the budgets that you have, and does not have the experience, you cannot fall behind in the generative AI market. It is the future. And let me show you guys why. So we're going to take a look at the actual results of Adobe Firefly versus Midjourney. I'm not even going to compare it against Flux. I'm not even going to compare it against DALL-E, which are tools that are very widely used by people in the industry right now. This is generative AI. Adobe is supposed to be the absolute dominant player in anything regarding photo editing, photo generation, video editing, video generation as well. Take a look, and Midjourney arguably is a startup. They've been around for a while. They do not have the same team. They do not have the same budget. These results are absolutely inexcusable for Adobe in this brand new segment. All right, so I'll go through a few of these. Here's Adobe Firefly. Right? It's the same prompts. He is typing in the same prompts and running them through both Firefly and Midjourney. I'm not even going to compare them against other programs because Adobe is either middle of the pack or bottom of the pack, guys. It is really not good. That is Firefly. Look at the bottom of the glass. It's all crooked, right? And there's Midjourney. I mean, come on, guys. It's not even close. Here is Firefly for a prompt of like an underwater ship type vibe, right? Right? There is Adobe Firefly. Here is Midjourney. Do you see the composition? Do you see the shading? Do you see the number of elements? It is not even close. Same prompt, guys. It's the exact same prompt. This is inexcusable, absolutely inexcusable, right? So here we have, once again, here we have some, is going to prompt for, this is portrait mode, right? So here's Midjourney. You'll notice the shading, you'll notice the accuracy and the detail in the composition. Many different, the lighting, especially the lighting schemes, right? Now, when you do Adobe, it kind of looks like stock photos. They look like stock photos that you just pull from Google, right? Here's Adobe Firefly. Adobe Firefly's portraits, right? Here's Midjourney. Look at the composition. Look at the shading. Look at the lighting. Guys, it's not even close. It is not even close. How is this acceptable? How are Adobe users actually accepting this, right? And the list simply goes on. The list simply goes on. Here we go. Adobe, you guys want to see more? So high fashion, stock photo by Google, right? Pretty much. Here's Midjourney. Guys, it's not even close. Come on. Seriously? Are we even doing this comparison anymore? Here's a realistic animal, right? Firefly, decent attempt. This is AI generated prompts, by the way. Here's Firefly. There's Midjourney. Guys, it's not even close. It's not even close. Look at the shading. Look at the color accuracy. Look at the lighting schemes. It's not even close. This one, arguably, Firefly does a somewhat better job, but I mean, this looks like somebody actually took an actual DSLR picture of a cat in portrait mode, right? It's not even close. We can go through so many of these examples, right? A realistic portrait as well. You want to put side by side? Guys. Seriously? It's not even close. You can go through tons and tons and tons of these. So if you want to know what my problem with Adobe is how is a company with so much cash, such a very large team, so much experience in the industry, how are they getting absolutely destroyed by other competitors such as Midjourney? It is just completely unacceptable right now, and that is the problem that Wall Street has been having with the company as well for the last 3 quarters. When you want to do the comparative analysis, you have to compare this against their peers. We've done this many, many times so far over the course of the year, where we compare existing legacy companies that are having their business models eroded by other secondary companies. Nike is a prime example. When you have an execution problem, you are not executing and you lose your market leader status, and other competitors are developing better quality products such as ONON, your stock is just not going to move. The competitors are eating your lunch. Lululemon has this exact same problem with competitors popping up all over TikTok and Instagram, selling their organic brands for arguably similar or slightly less quality, but for a fraction of the price as well. The examples are so much in the market right now, and this is just another example of a company that was top of the game and now are squandering their lead. You know what? I'm going to go out on a limb here. It reminds me a lot of the Intel story. Intel had the lead for so long, and then AMD crept up behind them and started eating their lunch, guys. So this is unacceptable for Adobe, in my humble opinion. I know I'm being a bit harsh on the company, but I mean, guys, like, generative AI and generative video editing and software editing is the future. It is absolutely the future. So when you have a company that is not executing well, even though they have market leader status, you have to ask yourself, why is this the case? And have they acknowledged this? And as a whole, as you guys saw, the executives are not acknowledging this. I would rather they come out and say, listen, we're doing generative AI, but we have a lot of progress still to be made. We realize we're not number one, and that is a problem for us. That is what a company with a solid backbone would do. But from the CFO and the CEO to come out and say, yeah, we're doing well because our users are up year over year, well, be careful with that, because eventually when people realize that other competitors have better products for a lesser cost, that will no longer be the case. The user growth will top out, start declining, your revenues will start declining, and then you will start to see it in the financials, even though they said that right now they're not noticing it. You need to notice this, guys, and I have not heard anything from Adobe over the past 3 quarters addressing the issue that they are indeed behind and that it is unacceptable. They have to hold themselves accountable, and that's what Wall Street wants them to be, a dominant player in this industry. That being said, that's about the future of Adobe, my thoughts, and I believe this is also a few of the analysts' thoughts as well, right? How Adobe is kind of slowly but surely falling behind a lot smaller competition that does not have its revenue, does not have its free cash flows either, right? That being said, the numbers this quarter were very good. Look at this revenue increase, right? 11% year over year. That's very good. EPS also non-GAAP is what We can usually measure 13%, which is very, very strong for the quarter. Operating cash flows are up very nice. Free cash flow has never been a problem for the company. Very strong free cash flow company as a whole. Revenue for digital media segment, which is arguably their most important segment. Document for Adobe Document is plus 17%. Creative, 10% up. So digital media totals up 12%. Net new ARR, annual recurring revenue. Adobe's been doing a fantastic job since pivoting their business model back here pretty much from a one-time fee for their products to now a subscription model. And they're also offering bundles too, right? I think I showed you guys, look, get 20 plus Creative Cloud apps for less than the price of 3 apps. So they are bundling. They're doing a good job of trying to sell as many of this stuff as possible, whether it's Premiere Pro, whether it's Adobe Lightroom or Adobe After Effects, Dreamweaver, Photoshop. You guys know most of all these products, right? But you cannot ignore, we cannot ignore this. It is a big, big, big problem, right? Here's Firefly. It looks like a Google stock photo. You just Google like woman in red dress, and it's just like a normal photo, right? That's Firefly, and this is Midjourney. I mean, come on, guys. It's not even close. Are you kidding me? Look at the shading. Look at the composition of the background, the lighting effects, right? It's not the same. It's like a kid did this one and a pro did this one. You know what I mean? So this is the problem that Adobe is facing right now. And this video, no, is not that old. As a matter of fact, this video was about 7 months ago. So possibly it's gotten incrementally better, but it's not better than Midjourney right now. I have a lot of friends that are in this industry, and other programs are far, far, far better than Firefly. As a matter of fact, not many people are using Firefly. And the ones that do may not be the actual pros of the industry. And you guys know the trickle down effect usually comes from the pros down. 10 years ago, right, when I first started analyzing this company, first started getting accustomed to this company, Adobe was the go-to place for anything photo editing, video editing, and everything like that. And now their dominance is slowly getting chipped away on every single front, whether it's video, photo editing, generative AI. Other competitors are seeing what they are not doing properly at Adobe, and they're capitalizing on these opportunities to develop better and better products with less team members, right? Less developers, less budget as well. And that cannot be allowed to happen, right? Free market is the free market for one reason, right? So that being said, still strong numbers. Digital experience was up 10% year over year. RPO is ever increasing. This is about 1 year's worth of revenue. So that is still very decent. Shares repurchased, 4.6 million. The operating margins are still very, very, very solid. And the employee count remains at about 30,000, slightly elevated too in terms of the full fiscal year, because they did report the end of the full fiscal year, 11% growth of year over year in terms of revenue. And we did have a 15% year over year increase in non-GAAP EPS, excuse me. So the numbers, guys, just the numbers. If you forget all the context that actually matters in the space that'll matter the most in the next 2, 3, 4 years, in my opinion, to retain those customers. If you just forget about all of this that I just said, which is very important, right? It's the context. The context matters a lot. And we just focus on the numbers are very good. I showed you the balance sheet. I showed you the expansion and the forecast of the company. The company has very good free cash flow, very high net margins, decent share compensation. They're not diluting shareholders by issuing more and more shares to employees and whatnot. Revenue growth, very healthy, 10% per year. EPS growth of 14.5% per year at $500, where they stand right now in the after hours after being down roughly 9-10%. Where does their valuation stand? Well, it's actually quite good at $500, 24.36 on the PE. And in terms of when we divide the PE by the EPS growth rate, you get a 1.68, which is very decent, a very fair valuation for the company. Free cash flow yield at about 2.72, a little low, but you know, when we look at the growth prospects of the company, it is still quite good. But I have my concerns for the longevity of this company. I cannot, with utmost confidence, put Adobe in my long-term portfolio for the next 5, 10, 15 years to the same degree that I can put Microsoft or Google or even Amazon there too. So although the company is a very solid company, there are cracks starting to form in their ability to keep up with trends and retain their market leader status. That is the problem that Adobe has been having, more so. So it questions whether or not how strong is their competitive advantage? How strong is the company's moat? And as we can see, it is less strong than a lot of people had previously predicted. So for me, Adobe, long-term position, I'm not personally going in, but in terms of only fundamentals, there doesn't seem to be much in terms of fundamentals to worry about right now. In terms of a swing trade, I'm not opposed to playing Adobe for a swing trade, but I need to get a very good price. Last time I was interested in a swing trade was back here at about 450, and same. I will only be interested in the event the stock gives me another opportunity down here in the 450 range. Could be interested for a little bit of a swing trade here, guys. And those are my thoughts on Adobe. I never want to sound too harsh, guys, but you gotta say things how they are, right? If you only look at the numbers and we only look at the earnings slides, you would think that nothing is wrong with the company, and you'd say, oh my goodness, they're down 9% in the after hours. That is an overreaction. But is it really an overreaction, guys? Right? Is it really an overreaction? Firefly? Midjourney? You know what I mean? Like, is it really an overreaction, guys? You guys tell me. You guys are going to be the judge on this one, okay? So that's pretty much everything we had for Adobe, essentially. Hopefully you guys enjoyed that. Now let's jump into the juicy stuff, shall we? So let's jump into the SPY. So SPY up about 0.77%. Not too bad of a day, and nothing much has changed either. So at this point in time, guys, the daily uptrend remains solid. However, one day of bounce may not be enough. We need to get the new daily higher highs, because now the daily higher lows are set right here, 602 pretty much. Anything above 602 looking to maintain the daily uptrend. However, number one, if we go, the next stop to the highs is about 615, 616 at this trend line. The trend line has been there for a very long time, so this will be your new area of resistance. All-time highs with the trend line 615, 616 to the downside. In the event we flush this, end up with a daily downtrend. Is it that big of a deal, guys? Not really. The bulls remain in full control of this chart right there. Pretty much at this point, anything above 582, just looking for a weekly higher low. So if you do get the daily downtrend, do not panic. We are going for weekly consolidation, and anything above 582, take a look at when we line up with 12 EMA. Could be a little bit of a touch and possible resumption for the uptrend. Moving into the Qs right now, the Qs are also looking quite healthy as a whole. And even though the Qs have been really carrying the essence of the market here for the last one day, for the last 1 week, and you can make an argument as well, majority of the last month has been done by heavy lifting by big tech names. Well, let's take a look. As a matter of fact, is it having that much of an impact on the markets? Here's the total percentage of stocks above the 50-day moving average. You can see it is still a very healthy number at about over 60% of all stocks in the market are above their 50-day moving average. Definitely not showing signs of a weak market like down here when we're in the under 50% range. In terms of percentage of stocks above their 200-day moving average, you'll see that we are still at a very healthy 62 read in terms of 62% of all stocks above. So although it is a somewhat top-heavy market, the rest of the market isn't falling off a cliff. They're kind of just maintaining gains overall, and that other half of the market ran very strong in July, August, and September, when the Qs were pretty much sideways like this. A lot of other sectors were performing very strong, guys. XLP, that same period, consumer defensives did this, utilities did this, real estate did this. You know what I mean? So they deserve their time off. Now it is the QQQ's time to shine. So 1.8% to the upside, looking very strong here on the Qs. Daily uptrend is maintained right now. I'll remind you, if we do pull back any single move lower, looking for a higher low, anything above 519.53, higher low for possible further trend continuation. If you roll this over and get the daily downtrend going, no big deal. A lot of space on the weekly here, guys. Who's in control? It has to be your weekly bulls, of course, right? Would just be looking for a weekly higher low for further trend continuation. Where could that higher low come? Well, right here, 515 down to about 510. The 12 EMA on the weekly should be curling up there as well. On the daily chart, it'll make a lot more sense when you guys see it. It is this whole area right there. That could be a likely pullback area. And in the event of no pullback, well, the next area of big resistance, probably about the 540 psychological level. Now let's move into financials. So financials, we know that they've established a new daily downtrend. Of course, what the bulls need to do is reset into the daily uptrend. However, in the event we perpetuate this daily downtrend, not that big of a deal, guys. Who's in control here of the weekly time frame? Obviously, our longer term bulls are looking very strong here, looking for a weekly higher low for further trend continuation. Where could we maybe stop to the downside? The 12 EMA. The 12 EMA has pretty much been your trend guide for financials ever since the rally started, all the way back here in October of 2023. That could be a likely test in the event we continue our consolidation here. And consolidation is natural, guys. These bank names have run an absolute ton. Look at JP Morgan, right? Similar setup. Look at Bank of America. very similar setup, needs a little bit of a pullback, guys. These stocks are not Palantir, right? They're banks. Wells Fargo, not looking too bad, but does still require a little bit of a pullback. Citigroup, also possibly requiring a little bit of a pullback. The investment banks, Goldman Sachs, does require a little bit of pullback and retest of the 12 EMA. And lastly, we'll pull up, I guess, Morgan Stanley too. Morgan Stanley needs a little bit of a pullback. The credit card issuers too. Visa has ran a ton. MasterCard has run a lot as well, but MasterCard is roughly in line with the 12 EMA slightly. And American Express too, right? So we've had a lot of gains, completely normal for the financial sector to be pulling back a little bit for a well-deserved breather. Moving on to XLV right now. Well, XLV continues to be somewhat of a dumpster fire right now, guys. We were looking for the possible recapture by the bulls of the weekly uptrend, right? We tried to get a very nice bounce going here, establish the higher lows, and go for possible trend continuation. But unfortunately, at this point, guys, the bulls have given it all back, which is why I say, right? I always say it gives, when you have a very nice bounce like this, a 70+% bounce on the on XLV, it gives the bulls a very good chance, the best chance actually, at resetting into a daily uptrend. However, it does not guarantee a new daily uptrend. So always be careful of that, which is why I say if we're looking to position with size, we need the trend confirmation. I need the daily uptrend confirmation. I need the weekly trend confirmation to start positioning with size in a sector that has been in a weekly downtrend for the last 3-4 months. I'm not trying to predict the reversal by trying to go early here, entering here and going for the daily uptrend. It is not guaranteed. I want to see it first, because if I wait for it and enter here, my stop goes below there, and then we are targeting the highs of the weekly expansion all the way up here, right? But when you go in with no confirmation, it's a very easy recipe to continuously possibly get destroyed. So at this point in time, guys, the bulls are losing all momentum. They still have a a tiny amount of space to set a new higher low and go for the trend change once more, but it's not looking too good right now. If anything, is looking highly likely that the bears are going to retest these lows, maybe even dip a little bit lower. 140 down to 134 is going to be the mark. Good thing for them, there's a ton of support down here, guys. This is all previous resistance, should be similar support for the bulls, but in that case, if they give back too much, guys, you may just devolve once again into somewhat of a tightening range. The same thing that happened right here, no trend expansion. That's what might be happening for healthcare. There's a lot of uncertainty around healthcare, and I think that it has a good chance of possibly being maintained, possibly even through the inauguration, as we wait for the new Trump administration's policies on what they're going to do in terms of addressing several issues in the healthcare system right now. Moving on to SMH. SMH actually having a very beautiful day today, 2.45% to the upside, but they haven't changed anything. It was a very nice bounce, but still no clear trend change, right? Daily downtrend was clear, very nice engulfing move. The bears took back a lot, and now once again, are we going to do it, guys? Can we set the daily uptrend, and can we start attacking this resistance range, or will we just be perpetually stuck between these two levels, 260 to 250 to the upside resistance, and 230 down to about 220 to the downside support? As of right now, no clear trend, right? It's just a somewhat of a very wide tightening range, a tale of being trapped between two levels. We will have more confirmation. If we break 233 to the downside, that would be weekly downtrend into big support. We'll see if the bulls can play defense. And to the upside, of course, well, to get the weekly uptrend going here, guys, you need to get a break and close, especially the close above 260, because that is something the bulls have not been able to do since all the way back here in the month of July. Of course, we have one very big catalyst for the sector tomorrow, which is going to be Broadcom. If they do very well, expect us to attack this area of resistance and maybe even start pushing higher, as we can have some renewed bullish sentiment in the sector. But if they miss and they have poor guidance, expect a revisit of these lows. Once again, 230 to 220. Myself personally, I'm kind of waiting on the sidelines until after tomorrow's AVGO earnings to derive which companies I want to play specifically. There's a lot of very nice ones right now for some short put opportunities under the market, but I'm waiting for this last volatility catalyst for positioning it anymore myself. Moving on to the Russell right now. So the Russell was actually doing fairly well over the course of the morning, however, eroded over the course of the rest of the day. As you can see right here, big drop in the end of the day, guys. And once again, that has to do with how mixed the market has been. I keep bringing this one up, but IWM sector weightings, guys, 17% in financials, 16 in industrials, 16 in healthcare. What has a heat map been looking like for the past 1 month, essentially, or even the past 1 week? You can see, right? Financials down, healthcare down, industrials down. When you have 3 of your top weightings of the Russell, well, you cannot expect this one to just be flying and catch up with technology, right? It is not 2,000 tech companies in here. It is kind of like the S&P of the small cap index. So moving on further, guys, now at this point in time, the bulls are still trying to find, right, a daily higher low right now. But at this point in time, I'm going to give it to the bears if we get one more flush. All right. So we had the daily uptrend. The daily uptrend was clear as day right now. But now we're coming into a little bit of a problem where we can see lower high and lower low. If they flush from here, because we did reestablish the hourly uptrend again and closed decently above the moving averages, if they do not get it done, guys, if we flush yesterday's lows, 235, I will confirm this as a new daily downtrend, and I will just simply say that we are going into further weekly consolidation. So the bulls have been somewhat weak over the past 2 weeks. That being said, we are still always looking for a weekly higher low. Anything above 226, looking for a weekly higher low, because we are in the context of this very big weekly uptrend for the bulls right now. Although it's been a little bit choppy in the past 2 weeks of trade, still not looking bad. They have a very large area of support to be backing themselves up after. This is 2021 highs and 2020. Now could be pulling back into them, using them as support, and possibly due for the next edition of the rally. Moving on to the Dow Jones right now. The Dow Jones also down about 0.22%. Not a bad showing for the Dow, but kind of looking like the Russell as well, right? Why? Well, because the Dow is pretty heavy, top heavy in terms of healthcare names and in terms of the financials names too. So those have been coming down recently. And as such, the Dow Jones has also been suffering the same fate. Daily uptrend is clear as day right now, still looking for the higher low. Anything above 43K, pretty much looking for a daily higher low. And we're coming into the last line of defense, temporary defense. 44.3 down to about 44,000 is the mark. Any bit lower, and yes, we are losing a temporary level, but who's in control of this chart here has to be the longer term bulls, right? Looking very strong for weekly uptrend continuation. Anything above, let's just call it 42,009, just looking for a weekly higher low for further trend continuation. I expect a decent reaction down here if we come down into it. Around the 43,400, which is the 12 EMA, has been supporting the Dow Jones for a very long time. Arguably ever since the rally started last October as well, 2023. That is pretty much it for your sector rundown. Let's do a tiny little bit of Bitcoin because not much has changed, guys. Still no major breaks of any levels. We're back above 100K, but still we haven't really broke a trend to the upside nor to the downside, right? All-time highs remain intact. Around 102, 103 is the next area of resistance. Clear as day on the chart. And we have not lost either the daily downtrend to the downside. So the bulls are still looking very, very solid right here, looking for that daily trend expansion. Now, the weekly is also looking very, very solid. No real loss of the weekly timeframes, just trying to kind of find a baseline of support down here in the lower 90s, coming into it a few times, now establishing a base, still no well-established weekly higher lows. This is like a triple weekly higher low right here. If they want to kind of curl and then maybe run like this, what does this chart look like, guys? It looks like Tesla right here, right? Looks like Tesla. So when the chart looks like this, and they barely establish the weekly higher lows, they do not give up the daily uptrend at all, and they seem as though they want to push higher. That is what you might end up with, guys. And why do I have that bullish leaning bias? Well, of course, because of how this one looks on the monthly. Look at this beautiful monthly November candle close. I would not be surprised if the bulls continue pushing. Of course, the next area of resistance is going to be the 110 psychological number all the way up there. So everything on Bitcoin looking extremely solid. In terms of the rest of the altcoins, and I include Ethereum in the altcoins as well, everything has to do with the Bitcoin dominance chart, guys. Keep an eye on the Bitcoin dominance chart. As of recently, there was a little bit of an uptick on the liquidation event in crypto a few days ago. But overall, guys, it is still looking like they want to establish the Bitcoin dominance downtrend as a whole. So you should be still having a little bit more outperformance in the altcoins versus Bitcoin. Look, we just started a new day. Bitcoin and ETH are slightly red, but you have a ton of outperformance here depending on the coins that you're looking at. So Bitcoin dominance still embarking on this weekly downtrend. And you guys know when Bitcoin dominance goes on a downtrend, it doesn't mean that Bitcoin's going to go down. It just means that everything else is going to go up a lot faster, which is why it's the start, in my opinion, of the infamous altcoin season. So not looking too bad on crypto at all. And the same thing goes for MSTR. I mean, all the Bitcoin proxies, right? MSTR is looking decent. Coinbase is looking decent. Hood is looking decent. They're just kind of holding their levels, right? Really just holding their levels. So whatever you guys want to play in terms of a proxy is entirely up to you. But the guide should always be Bitcoin, right? The same as when I'm looking to play Microsoft. I need to know what the QQQs are doing, right? And you have to put it in relation to the underlying index or the underlying benchmark as a whole. Now let's move on to our big tech names, shall we? So moving on into number one, give me a very brief moment. And let's have a look at our big tech names, shall we? So moving into Apple, Apple actually with a rare decline today. They were actually higher, establishing a new all-time high, clipping into the 250 range, and now effectively coming into a slight little pullback. I'll remind you, the daily higher lows are right here, 241. In the event we kind of flush this range right here, guys, you will have a loss of the daily uptrend, open the door for a daily downtrend, and it might open the door for one of my favorite trades. Can you guys guess what it is? Well, of course, it's the infamous breakout retest, isn't it? So weekly trend is very nice right now on Apple, broken out of the recent all-time highs, which were all-time high resistance for a long time, 6 months of resistance, actually. Now, if you pull back into it with a little bit of consolidation in the next few weeks, could open up the good old breakout, retest, and possibly run for continuation of the weekly uptrend. The monthly was never a problem, looking for the monthly uptrend expansion, so any slight retests into this level could be a very nice opportunity for a future rally. Which stock did this as well recently, guys? Meta. Meta retested a roughly 6-month range, almost retesting it, not quite clipping into it, but you guys get the drill, right? The rest is pretty much history. So Apple, not looking too bad for a swing trade if we get a retest down there. In terms of a long, for some longer term portfolio shares, I mean, if we're just starting a position on Apple as part of a new portfolio, if you're new to the markets, I see no problem with Apple up here, but I wouldn't go too heavy. The valuation is a little bit expensive. Now it's about a 3.5 peg. And as well, guys, the revenue growth has been roughly flat. Now, a lot of analysts are saying that the iPhone 16 sales and the new Apple M4 chips and the new suite of products, the new iPads, the new AirPods, the new watches as well, are doing fairly well in terms of sales numbers. Will it be enough to really kickstart a brand new growth curve in Apple's revenue? That we will have to take a look at when we get Apple's quarterly earnings at the end of the month of January. But so far, I've purchased 2 new products of Apple myself this year, the iPhone 16 and the new Mac M4 pretty much. I wish I could show you. It's right here on my desk. It's tiny. It's a little computer, personal computer. It's super tiny. It's in terms of the size of it, it's actually smaller than an iPhone in terms of length. 5 inches by 5 inches, and essentially very powerful, very good bang for your buck as well, which is not something that you're used to hearing from Apple. You know, a very good price, good bang for your buck. Usually Apple's a bit expensive, but those Apple M4 Mac minis have been doing really well and really getting really good reviews from the tech reviewing channels as well. So no problem here with Apple, but in terms of my long-term shares, I have a lot of long-term shares that I've acquired over the years, guys, so far. I'm not selling any of them right now, but I'm not really buying any more up here. For me, Apple remains a hold. Moving on to AMD right now. So AMD up about 2% today. Not the worst day for AMD, of course, but still relatively low on the charts, right? The bulls need to start everything from scratch. We had a daily trend change attempt here, but they kind of rolled it over, right? So now we know the bulls control no time frames. They do not have the monthly time frame. They do not have the weekly time frame either, loss of the weekly uptrends, and we also do not have the daily time frame either. So they need to start absolutely everything from scratch. Step number 1 is starting a new daily uptrend. Once the daily uptrend is confirmed, then we measure how much of this new leg of weekly selling can we recapture. Can we engulf and reset the weekly? Perfect. We'll take a look at it then. But as of right now, the bears are in full control of everything right now. So if I wanted to play AMD, guys, I'm going to play it with short puts, and I'm going to be very conservative on this one, playing short puts below the 120 to 115 level. You have to give me a very good price to bid AMD right now, even though the valuation right now is very cheap in the 130 range. It's about 1.17 peg, which is not that bad at all for the company. What Amazon said last Friday kind of rubbed me the wrong way a little bit. They were saying that the demand for AMD data center chips is not as strong as expected. And when Amazon says something, guys, you have to listen. They're the largest cloud player in the entire market right now. They have the biggest installations. They have the most market share. When Amazon tells you that there is a lack of demand for AMD chips, you have to listen, guys. So that being said, the fundamental valuation of the company is still relatively cheap, possibly because of that, right? They're coming into their EPS ramp for those data center chips, coming into the revenue ramp of those data center chips as well. But if they cannot hold a candle to NVIDIA's Blackwell and the demand is not there, those numbers can be revised down. That being said, I do still think AMD is a good opportunity down here. It is a favorable risk to reward profile, but we cannot say the risk is zero. There is still some risk. So I will be looking to bid using short puts under the market for a very attractive price For longer duration call options and things like that, I need to see at least a daily uptrend. I'm not going to be trying to pick the bottoms here. I need to see a confirmed daily uptrend and the bulls attempt at a weekly trend change as well to position for some calls, because when I go calls, I need to have at least some longer term uptrends. And as of now, you are fighting against every time frame. You're fighting against the monthly bears, you're fighting against the weekly bears as well, and you are still fighting against those daily bears too. So I need some time frame control from the bulls here before positioning aggressively with any options. Moving into Amazon right now, another beautiful day by Amazon, 2.32%, not looking too bad. They had a few days of decline right here, hourly downtrend, and this is the new daily higher low right now. So daily uptrend is clear as day, clipping into very high levels of RSI right now at about 73. Not looking too bad though. That being said, daily uptrend is clear as day. If we roll this over and establish a daily downtrend, no big deal, guys. Who's in control of the charts here? It is definitely your Amazon bulls, right? Looking very strong here. Any extended pullback going to be looking for a weekly higher low for possible further trend continuation. Amazon is doing phenomenal numbers, and this was to be expected, guys. I've been calling this pretty much all year so far. I was saying that this was the opportunity of a lifetime to accumulate some Amazon shares. Why? Where were the bulls accumulating, guys? Above prior 2021 and 2022, or 2020 and 2021 all-time highs. 6-7 months of accumulation right here. You kind of have to bid those, guys. Now we have the expansion. Why? Because Amazon is doing something they've never done before. They are focusing on free cash flow yield expansion. They've never done that before. They are focusing on net margin expansion. Look at this net margin expansion over the last 5 quarters. They have never been a net margin company. It's always been top line revenue growth at all costs. Now they're trying to put the shareholder first, boosting free cash flow, boosting EPS. Amazon is going to turn into a free cash flow monster of a company, and their AWS segment is still the market leader in that cloud aspect. Moving on to Google right now. Google, 5.5%. Oh man, guys. Now, I mean, I never want to say this, guys. I never want to say it, but I have to be able to say it now, guys. I told you so, right? Google, new all-time highs, 196.71. I was one of the only people saying how great of a deal Google was down here this whole time, down here after the Department of Justice news broke out. They were trying to break out the company. I threw some call options at it there. I picked the absolute bottom for leaps as well. And now, you know, a lot of people in our Discord as well are making very large sums of money with this Google trade. It was one of the easiest trades in the entire market. If you could get past the Department of Justice headline risk. I mean, the valuation spoke for itself, right? How long were we trading down here? Around the 170s at a 1.2, 1.3 peg? That is way too cheap for Google, guys. Way too cheap. In terms of the fundamentals, guys, the net margins were never at question here. None of the fundamentals of the business were ever at question here. Some people saying they're losing market share to ChatGPT and search on Google is dead. Search is for boomers, guys. I would beg to differ as of right now, okay? So EPS expansion is glorious for the next 4 years. Revenue expansion is glorious for the next 4 years. This was an easy money trade. Or even on the technical basis, guys, weekly uptrend, weekly higher lows into big support level. You have to bid those. You have to bid those, right? At least with a little bit, not financial advice, of course, but as such a strong company like Google at a 1.21 peg with a 6-month bearish momentum on the MACD, finally crossing bullish, you kind of have to make a little bit of an attempt at these guys. And now we are handsomely rewarded. Google brand new all-time highs, looking extremely strong. Daily RSI is up to 75 now. But look, even if we pull down here, guys, what are we looking for? Just a new daily higher low. Anything above 168, just going to be looking for a new daily higher low for possible further trend continuation. And where are the targets? My personal targets are 210 at 220, and the analysts do agree. A lot of meat left on this bone right now. Where can we possibly pull back into? Well, the first line is obviously going to be, where is it? Where's my line right here? The first area is going to be the prior all-time high area. These guys right here. If we plow through this, the larger area of support arguably is this red box right around here, right? Which is about the 181 region. All of that being said, they have a ton of space both on the daily and the weekly timeframes for any pullback, which in my opinion will still be for a buying opportunity. Would I chase Google up here? Not with a lot of size. There is still some meat left on the bone, but I would be partial to waiting for a pullback. If you missed it, you missed it, guys. At this point in time, I would be possibly waiting for a little bit of a pullback. Moving on to Meta right now. Meta 2.16% to the upside. I mean, Meta has just been an absolute powerhouse, right? Very beautiful daily uptrend in motion right now. They established the daily higher lows as well. Bit of a, I mean, they never really lost the hourly time frame, so you can argue that this is one single big daily uptrend, and I would agree, right? The daily higher lows are still all the way down here. Anything above 554, just looking for a daily higher low for possible further trend continuation. And if we get some extended declines here, or even a daily downtrend, it will not matter. Why? Who is in control of the weekly timeframes here, guys? It is the weekly bulls. Any pullbacks will be a dip buying opportunity, looking to reset this weekly downtrend into a brand new weekly uptrend off of any pullbacks. This area of fallback could be 600 down to about 580. That would be a likely retest zone, and I will be sitting there to possibly be buying the dip on Meta because all of this resistance will now be support. The moving averages are there too, so a quick and sharp decline into this area could be a very decent buying opportunity in my humble opinion. Moving on to Microsoft right now, another 1.28% to the downside, or to the upside rather. And this one as well. I don't know how many times on the channel I was saying that it was a very good proposition to be buying Microsoft. A lot of you I know heeded that non-financial advice and now are up a lot. Same thing, right? 6 months worth of negative MACD bearish cross, and now we have the bullish cross with the establishment of a weekly uptrend with the break beyond a resistance, key resistance point, 434 down to 425, which was preventing us from rallying the entire year. Now you have the weekly uptrend breakout, you have the close and break above the big resistance zone, you have the MACD cross. That is what we like to call confluence, right? Leads to more continuation. Microsoft looking very healthy right now. Any pullback at this point, we'll just be looking for a higher low. Anything above 417, looking for a daily higher low for further trend continuation, looking very strong. Even if you get some daily downtrend action right here, we have a lot of support below us, guys. 434 down to 425. That is your brand new support, finally crossing above it. Used to be resistance, will now be support. The moving averages are there too. Could be something like this for a next buying opportunity. Moving on to Netflix. Netflix 2.54, Netflix. The new Palantir, right? Looking extremely strong is Netflix right now. So daily uptrend simply resumes for Netflix. Nothing to see here, really. Beautiful daily uptrend. We're going to be looking for them to, this is their game to lose at this point. 950 is the next psychological resistance, and then it's up to 1,000. If we roll over this daily downtrend, is it that big of a deal, guys? No, we have so much space on the weekly, looking very strong, looking for a weekly higher low. Beautiful weekly uptrend for Netflix right now. I cannot buy up here. The valuation is getting a little bit rich, right? Above 902, it's starting to get into the 2-peg range, which is a little bit high for Netflix. I'm not selling any of my long-term shares. I'm just not buying any more. This remains a hold for me. For a swing trade, I would need to see it come down and kind of tap into this 12 EMA at minimum. So for me, that would probably be something like a 860, 850 pullback. We're probably not going to get that unless the Qs really have a severe pullback. The RSI right now is about 81. So we're really chasing this one, guys, not only measured by the RSI, by the distance from the 12 EMA as well. They've been on a tremendous rally. If you missed it, you missed it, unfortunately. But now, in my opinion, well, at least the way I trade, I'm going to be waiting for a pullback on this one. Moving into NVIDIA right now. So NVIDIA up about 3.14%. Hey, finally, NVIDIA getting a little bit of love. Now, obviously, we have the Broadcom catalyst tomorrow, right? But always nice to see NVIDIA, you know, when people are starting to lose hope, people start calling out, oh, it's the good old head and shoulders. We're probably going to zero. Not always the case, right, guys? The context matters a lot in these stocks. They were saying the same thing about Microsoft, right? Everybody was saying the same thing about Microsoft. It's a big head and shoulders. We're going to zero. Not the case. The context matters, and the guide is the QQQ and the SPY. These will not happen on such strong names because of their sheer weight in the index, right? If the indexes are going up, it's very rare that you'll see the Qs and the SPY push to new all-time highs constantly, and out of nowhere, Microsoft and NVIDIA just go down 15, 20% just to fulfill a technical pattern. It's more rare than not. Now, I don't want to speak too soon because there's always a possibility of this, you know, following through here. But if we do follow through on possibly the daily downtrend as well, we're possibly going down to 130, 125 for a little bit of a retest down there. Not looking too bad, though. The bulls need to get their butts in gear and reset the daily uptrend. That would be a break of 146. Break 146, new daily uptrend is set. Your weekly higher lows are set as well. And we just go for possibly a new leg of weekly expansion because we have never lost the weekly uptrend, guys, and we have certainly never lost the monthly uptrend either. Just possibly a little bit of pullback. That's why I keep waiting for my test of 130, 125. That is when I do want to throw some call options at this one. Prior resistance should be newfound support, but no red flags on NVIDIA whatsoever right now. Well, chart is actually looking very good, and I will continue to play my favored strategy on this one, which is when you have a bunch of sideways consolidation, I'm just going to play short puts, close to my support range. The call options for me would probably come into the 130, 125 region with a further DCA in the event we come back down somehow to 120, 115. Valuation would be much more manageable down there. Even up here at 142, it's not that bad, guys. It's just under a 2 peg for all of this beautiful growth. Not that bad in the grand scheme of things. Now, moving on to Tesla. Tesla. Congratulations to all the Tesla bulls that never gave up, never surrendered their shares down here. Brand new all-time highs. Looking very good on the Tesla chart, guys, so congratulations. This is possibly going to open up one of the two trading opportunities that I've been mentioning, right? Prior to yesterday, I was saying we are battling with overhead resistance, which was clearly the previous all-time highs. There were two clear trade setups for me. The trade setup number one was a rejection from the all-time highs, retest of the area that we just launched from, retest and second attempt. This was the entry opportunity for a secondary retest. However, there was another trade as well, which is the breakout of the range and then the retest. So now it looks like we're going to have to go for the break and retest, right? Daily RSI is about 80, but Tesla is known for their crazy rallies to the upside, right? Tesla's looking very strong right now, guys. Who's in control of the weekly time frame? Has to be the bulls. Beautiful weekly rally right now. The weekly RSI slightly extended right now at 77. Next level for Tesla, of course, 450 and then 500. I know. It seems like just yesterday we were still back down here at the $200 range, right? Well, Tesla's looking very strong right now. You can talk about valuation all you want, and I agree the valuation is very stretched, but they said the same thing about Palantir and I've been saying it too, since $40, guys. So, the market can stay if you guys were complaining that the market was irrational about Palantir's valuation down here the whole time, that it was weak and undervalued, well, you can't really complain that Tesla is overvalued, right? The market will stay irrational for longer than you can stay solvent. So if you're trying to short this one, I don't understand why you're trying to short without daily downtrend confirmation at least, right? Never had any daily downtrend confirmation at all. So this is not a good candidate to short right now at all. Need to wait for confirmation. It's the same thing with buying a falling knife, right? Why would you buy a falling knife without a daily uptrend confirmation? You have no support by the bulls in that case. And here, the bears are just nowhere to be seen right now. So until that's the case, the bulls remain in full control. Going to be looking for the breakout, retest of the lower 400 down to about 380. Could be a nice pullback area for an entry opportunity for further trend continuation because the bulls control all the time frames. So once again, congratulations, guys. Looking very strong. And now lastly, Palantir. So Palantir up about 2.29, and oh boy, people were mad today, right? Palantir started off the day with a 6.5% decline. 6.5% decline. And somehow managed to end the day up 2.29%. That is a heck of a rally back, right? Which once again goes to show everybody trying to short Palantir. I do not understand how we can try to short Palantir without the loss of a daily uptrend first. The bulls have never lost control. This is one single, very large daily uptrend. We were always on a look below. We were always looking for a higher low. Anything above 59.37, looking for a daily higher low for further trend continuation. We have not even lost the 12 EMA, guys. So you might see this move here and you might say, oh, this is it. Well, just keep in mind who's in control here. The bulls are in control of every time frame, monthly, weekly, daily. Is the fundamental valuation completely overblown? Yes, I've been saying so myself as a Palantir shareholder. Everything is at extreme levels. Are the RSI levels extreme? Absolutely. Weekly is extreme, a monthly is extreme as well, but you guys know the market can stay irrational for longer than you can stay solvent, so play the price action for what it is. If we're looking for shorts, we need to wait for daily downtrend confirmations. Why? Because the entry is here, the stop loss is here, and then you go for the next level as a whole, right? If you keep trying to pick the tops for a short, you'll probably be out of money by this point in time, right? You'd rather have a defined and clear daily downtrend with a clearly defined level to be basing your stop loss off of. That being said, the bulls are in full control, looking very, very strong right now, right? Weekly uptrend is clear as day. Any move lower, even if we do lose that daily downtrend, who is in control? It is definitely the weekly bulls. Anything above 41, looking for a weekly higher low for further trend continuation. And the next ever area of retest, there's so much space. This is one move, guys. Any test lower, guys, I would assume $60 is going to be the mark that we may be able to pull back into if we actually do get those daily downtrends underway. That being said, Palantir, such a strong company. maybe not for the right reasons, because it's not expanding based off of fundamentals alone. It's very, since $40, it's basically hype and momentum at this point. The company does not have supporting fundamentals. But at a certain point, guys, momentum and hype plays are just fine so long as you play the pure price action for what it is. Just go with the daily uptrends, the weekly uptrends, and when they lose them, that's when you can take your foot off the gas, because most likely we're going into, if you lose the daily, you're going into a little bit more weekly consolidation, similar to Palantir has done in the past, right? Weekly consolidation is very normal for any stock out there. It can pull back for a few weeks in a row, get closer to the 12 EMA, and then you might just be on for possibly more continuation into 2025. So Palantir is looking very, very strong, guys. That's pretty much everything we had for today's video. In terms of the swing trades and the portfolio, swing trade ideas and the portfolio updates, we did it yesterday's video. So if you want to see some of the trade ideas that I'm looking for, just go to the end of the video of yesterday, and the links are down below in yesterday's video. The timestamps for those categories are in the description. So that's pretty much everything for today, guys. Hopefully you enjoyed it. Now, if you did, consider dropping a like. I would really appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. Would love to have you back here. We're getting on the way to 5,000 subscribers, guys, and we really appreciate if you can get me to that very legendary milestone. Love each and every one of you for watching the channel so far. It's been an absolute pleasure to grow alongside of you. And hopefully you've learned new things that can help you for your trading and investing along the process. And lastly, if you have any questions, guys, always feel free to leave me a comment down below. Anything you want to discuss about the macroeconomic environment, you want a second opinion on a stock or an options trade, I'll give you my best without it being financial advice, of course. And lastly, in the event you guys are interested in joining, I went away. My bad there, guys. So in the event you guys are interested in joining the Discord here, guys, and having all of my trades in real time, here are all the trades from the inception of the Discord. Green check marks are wins. The red little circles are losses, of course. These are assignments, most of which we've always gotten out at a profit. Very transparent with all my wins, all my losses. Past performance is not indicative of future results. I'm not guaranteeing the success rate, of course, but we've been doing very, very well. Consistent base hits on the channel and in the Discord group as well. So if you want all these trades in real time, feel free to click the link down below in the description for more information. We also do private morning live streams every Monday through Friday. All of my trades, the short puts, the wheel trades, the longer dated wheel trades, long-term investments, the call options, the call debit spreads, I pretty much have something for everybody. And also you can feel free to ask me your questions on all your stocks, your options all throughout the day. I answer very, very fast with very detailed explanations as well. So if it's something that interests you guys, feel free to click the link down below in the description, and hopefully I can see you in the group with us soon. And if not, well, I guess I'll see you back on the channel. Thanks so much for watching again, guys. Take care. Have a good day of trading tomorrow. I will see you tomorrow after the close. A big day of earnings, Costco and AVGO. Take care, guys. Have a good one. Peace.